Assalamu alaikum and welcome everyone. In today's video, we are going to dive into intriguing topic which is taxation in Islam economic thought. We will explore its purpose, its principles and its unique features, including specific topics of taxes like jizya, kharaj and emergency levies. Let's get started. Taxation is a crucial part of governance, ensuring resources are available for public welfare, infrastructure, and maintaining social order. But how does this concept fit into Islamic economic thoughts? In Islamic, taxation is not about revenue collection, it's deeply rooted in principles like justice, fairness, and betterment of society. Unlike conventional system, Islamic taxation aims to strike a balance between individual rights and collective responsibilities. In Islamic economics, taxes serves two primary purposes, fulfilling the needs of the state and promoting social equity. Now let's discuss the specific type of the additional taxes outlined in Islamic thoughts. Okay, let's start with the first one, which is jizya. Jizya is a tax for non-Muslim to be paid in an Islamic country. It is a form of a financial contribution for their protection and exemption from military. In return, they will enjoy the same rights and benefits as a Muslim citizen. Second one, which is kharaj. Kharaj is a land tax. The amount depends on the type of land and its productivity. The goal is to ensure a fair distribution of resources and to prevent holding or hoarding of lands. The third one, which is emergency levies for public welfare. In extraordinary situation like famines, natural disaster, or defend needs, Islamic governance allows for emergency levies. These temporary taxes are imposed to address specific crisis and lifted once the crisis is ended.
So hi, my name is Aliaa. I will explain to you what taxes are used to the welfare. In Islamic economic thought, taxes and other forms of taxation are seen not just as a means of generating state revenue, but as a tool for promoting social justice and ensuring the welfare of the community. This concept is rooted in Islamic teachings and emphasis for wealth distribution, support for the poor, and care for the vulnerable. So first of all is zakat. Zakat is one of the Rukun Islam and is mandatory charitable obligation for Muslims who meet specific financial criteria designed for purifying wealth and promote economic justice. The word zakat means purification and growth, reflecting its dual purpose of spiritual cleansing. Zakat is required for Muslims who possess wealth above a certain threshold called nisab, which is typically equivalent for the value of 85 grams of gold, 595 grams of silver. The standard zakat rate is 2.5% of an individual wealth and saving, including cash, gold, silver, and investment held for at least one lunar year. Zakat is distributed for specific groups mentioned in the Quran, such as the poor and needy, those in debt, travelers in need, orphans and widows, people working to collect and distribute zakat, those serving in the path of Allah, converts to Islam to help them settle in the community. The purpose of zakat aims to reduce economic inequality, elevate property, and foster compassion and responsibility among Muslims. It ensures that wealth circulates within society, preventing hoarding and neglect of the less fortunate. For the second one is khums. So what is khums? Khums is a religious tax in Islam, primarily observed by Shia Muslims, meaning of 1/5 of 20%. It is an obligation to pay 20% of specific forms of wealth or income, such as surplus earnings, savings, or unexpected gains, after deducting personal and family expense for the year. The collected comes is divided into two equal parts. Saham-e-Imam, used to religious and community purpose under the guidance and religious leaders. Saham-e-Sa'adat, given to poor descendants of the Prophet Muhammad SAW. Kums ensure wealth in share fairly, supports the needy, and funds community development, aligning with Islamic principle of economic justice and social responsibility. The third one is taxes on public lands. Refer to the taxation imposed on lands that are owned by the government but allocated to private individuals or entities for cultivation use or development. While the government retains ownership of the lands, it allows citizens to use them for various purposes such as farming or business activities. In Islamic governance, those taxes are collected by the state to help fund public welfare and services. However, the government typically does not share in the profit generated from these lands. Instead, the tax serves as a form of revenue to support community needs, infrastructure, and other public services. This system ensures that the government maintains the control over public resources while still benefiting from the use of these lands of private individuals. Number 4 is taxes on profit sharing enterprise. Taxes on profit sharing enterprise are taxes collected by the government from business where profits are shared between private entities and state. The government does not directly participate in the profit but collects taxes based on the business earning to fund public service and welfare, ensuring the benefits and distribute to the broader community. So the last one is taxes on the community. Taxes on the community are taxes collected by the government to fund public services and welfare programs that benefits the society as a whole. These taxes are used to pay for things like public servants, defense, healthcare, education, and support for vulnerable groups such as orphans, widows, and handicapped. They aim to ensure the well-being in the community and promote social justice. An example of taxes on the community will be income taxes or sales taxes and citizens pay to the government. These funds are then used to support public services like hospitals, schools, roads, publics, and military defense. They may also fund social welfare programs that help people in need, such as assistance for orphans, widows, and the elderly. Essentially, these taxes ensure that the government can provide essential service to improve the quality of life for all members in the community. So in conclusion, Islamic economic thought emphasizes the role of taxation as a mechanism for promoting social justice and ensuring the well-being of the community. Through taxes like zakah, ashar, and khums, as well as additional levies during times of need, the system seeks to redistribute wealth, reduce poverty, and support essential public services. These taxes are not merely financial obligations but instruments for fostering equity. Ensuring the wealth circulate fairly through society, the principle of necessity, equity, and public welfare guide the application of taxes, ensuring they serve the greater good while adhering the ethical standards. Ultimately, Islamic taxation aim to create a balanced society where the needs of all members are met, reinforcing the values of compassion, justice, and communal responsibility. So that's all. Thank you from both of us.